2023 was an eventful quarter for crypto, marked by high volatility due to a low liquidity environment post-FTX coupled with a range of factors including regulatory crackdowns, ongoing uncertainty regarding the pace of inflation, and concerns about the stability of the banking system. While the former were largely anticipated, the latter caught many off guard and following the bank bailouts put Bitcoin under the spotlight. Not only did Bitcoin enter the spotlight, but its value proposition arguably became more tangible than ever amid emerging hyper-narratives around topics such as de-dollarization and hyperinflation. As a result, Bitcoin outperformed most altcoins, with capital seemingly flowing towards its relative safety and away from altcoins, ETFs, and potentially even fiat and fiat-backed stablecoins. Meanwhile, Ether has also fared well but underperformed relative to Bitcoin, despite achieving net deflation of around 0.25% this quarter. Ether's underperformance may be due to apprehension regarding the unlocking of staked Ether, or simply due to the strength and topicality of Bitcoin's narrative. A weak NFT market, despite a riveting battle for supremacy between Blur and OpenSea, did little to help Ether's cause. Earlier in the quarter, we saw a slew of mini-narratives, AI Zero Knowledge, China, that came one after the other in quick succession but faded post-bailout. In what follows, we explore Q1 2023 in 17 charts covering Bitcoin, Ethereum, stablecoins, FL1S, L2S, DE, XCE, X, and options volume. Total stablecoin supply started the quarter at $138 B, about $4 B, down from where it was at the start of the previous quarter, and $25 B down from its ATH of around $180 B, from March to May 2022, just before Terra's collapse. After stablecoin supply appeared to be stabilizing at around $140 B a couple of months after Terra's collapse, in November 2022, another black swan, FTX, sent the stablecoin supply on a slight but steady downtrend. The steady contraction in stablecoin supply is likely attributable, at least in part, to participants losing faith in the market and or anticipating strong regulatory headwinds in the wake of FTX's implosion. Interestingly, the downtrend has extended into Q1 2023 at roughly the same rate despite more positive price action. These continued capital outflows can be attributed to apprehension regarding future regulatory actions as Q1 2023 saw increased hostility from regulators. The recent displays of the fragility of the banking system, which triggered bank runs, depeggings, and hyperinflationary concerns, may also have contributed to the decrease in stablecoin supply, as some market participants may prefer to park their capital in BTC or ETE instead of stables. While the downtrend is somewhat alarming, note that the total stablecoin supply is still 4.5 times higher than it was in DC 2020 when BTC was at current price levels, meaning there is substantially more capital waiting to be deployed than there was at the onset of the previous bull run. USDCC supply contracted slightly from $41 B to $37 B following its short-lived depeg event in the wake of the collapse of Silicon Valley Bank, SVB. Surprisingly, it continued to contract steadily after the crisis was resolved, ending the quarter at $31 B. Most likely, this is the result of investors de-risking from projects exposed to U.S. banks and U.S. regulatory risk. It's also possible that Circle's delayed response to the SVB collapse, despite public knowledge of their SVB connection, has contributed to the supply contraction, shaking investor confidence. In the same time frame, USDT went from a supply of $73 B to $80 B, gaining significant market share from USDC because of its lower exposure to the US banking system. BUSD also shrank significantly this quarter from $16 B, before news broke on February 12 that the SEC saw BUSD as an unregistered security and intended to sue stablecoin issuer Paxos to $7.50 B at the end of the quarter. The supply of BUSD could only go down in fact, as following the news of SEC's intentions, Paxos announced it would stop minting new BUSD tokens. In addition, Binance ended zero-fee trading for BUSD-listed trading pairs on March 22, moving them over to TUSD-listed pairs instead.